Yeah. This is your boy Malumitev. This is your boy Malumitev. Right. I saw something interesting this week. Today it's Monday, the 11th. No, the 12th. Yo, I'm lying to myself. It's not even a Monday. But yeah, you know how it is. We get tired. Right. So basically, we be checking on gold, right? From a daily perspective, I think overall we can safely look at the most common areas where we are most likely to have the most traction. You see, areas like this have high value because the interest that traders have in this area is very deep. And even though we haven't really reached this area per se, right now, this is our current market. To here is today. So we pass around here. So basically, we could say this is a retracement of this impulse move, which was made because this was a new lower low. Wow, lower low. And in turn, this we could say made a bullish head and shoulders or inverse head and shoulders, which was a sign of a reversal change of trend from a downtrend to an uptrend. So this in itself, this would be the left shoulder, the head, the right shoulder, and if it closes above this area line, if the price closes above this area line, we are looking at a sheer buy as soon as we break out above. But I'm looking at taking my buy orders as soon as I break out above long term, right? Okay, so we can safely say from here we could be looking at the most common points of structure. Don't go too far, just look at trade what you see. Trade what you see. This is the downtrend. I was trying to indicate the downtrend in itself, even though it might not really account for the most touches. But then for now, I was just trying to illustrate what I mean, right? As I was trying to say, a change from, because if we go to a higher time frame, the same time frame that we've been analyzing on the D1, we can see that this is the resistance of our downtrend, and this area here is basically being a false break, but up until this area where it tried to come back underneath underneath our channel where we expect the price to be, it ended up hitting this new lower low, and then pushing up towards the upside, breaking out of our trend. So we are trying to capitalize on this retracement as it goes back towards the initial move we have. So basically, I'm looking at this. Although it might be risky, everything in trading really is. We could look at this, or instead of using this, let me just use a general area because it's using levels is better. It gives you a clear, not necessarily a clear point of view of where to like kind of measure entries and exits on your trades. It's like, if you ask me now, I feel like if you have an area shaded instead of a horizontal line, at least you would have a margin of like you could have that space where you say, okay, we know that even though I'm not specifically sure at the price in which it's going to change direction, we basically know for a fact that around this area there should be some form of a movement of movement of interest. So around this area, because it was retested as once, twice, three times as resistance, and around here it was support for a few minutes and then resistance again. So we'd be basically looking at this break of structure to retest back at our trend line, at least around this area again, where it is right now, to be honest. And if it closes above this area, we know that we could shoot up for our buy. If it closes above, we can shoot up for our buy. This is what we call smart money. At the same time, I was looking at a few factors that actually make me say I want to look at this. Right, there was this other strategy I learned about. I was learning about as the year started, called the order block, meaning that any impulsive move, look at where the move started. Wherever the move started, look at the opposing candle just before that move. And wherever that full candle is, which is this one, this bearish candle here, from its open to close, this area, it's basically where there is most likely to be some sort of I don't really know if I'm finding the right word of explaining this. Some sort of commotion, some sort of action, some sort of movement. Rau rau, and noise. Noise, yeah, noise. So I expect this area to have the most around amount of noise. So even if we break out below this and we end up closing below this zone which I was going to use to enter my buy entries, I'm going to wait and see what it does around here. If it breaks out below and closes below, that's when I know that okay, my setup isn't valid. I have to look at something new. But if it's still around here and it actually closes above this, then I know for a fact that I could at least go with minimum risk and enter a few buys. And as it goes up with my general move, I expect it to come back and form some sort of shape before it continues back in that direction. It's gonna form some sort of pattern before it continues back. So basically, it might even form a triangle around this area. It might form a triangle around this area before it before it breaks out. It breaks out. Yes. I'm going to leave this here for a while just so that I can come back and say, okay, let me remove all these things. I need a clear chart. Okay, and then since I know what I'm going to be looking for mainly by entries, I was looking at the D1 time frame, so let's just go a little bit lower down. I go to my 4-hour, I see the most important point here. Okay, 1, 2, 3, 4, and then chart. Okay, I was playing around this area. Okay, these are the most tested points. Okay, and like we said, rather than using direct horizontal lines, use zones, because unlike horizontal lines, zones can account for at least a bit more, a bit more leg room for if price doesn't necessarily go straight to your direction, because it's impossible to say that a price might switch direction as soon as it gets to your point of interest where you think it might. Like that very same, okay, imagine this. I say as soon as price gets here, it's gonna shoot back up. But then it starts by going like maybe more 50-60 pips down. That 50-60 pips can make a difference if you're on a small account. You might blow that 50-60 pips. You might not even know how to say. So from our smaller time frame, okay, our smaller time frame, these are the areas we'd be looking on. So basic, since I said I'm going to be looking for buy entries, and where we are basically at, there is the support level of our zones. Okay, so here, before I could start now, before I could say something a bit more intuitive, we could basically make up a few patterns right here, because if we check the previous day's price movement, this pattern, I might have forgotten it when I see it. This pattern is a descending pennant, I should think. Okay, I'm still getting confused about these thingies, because some of us, like, we don't really remember these things by heart. We take each one and then remember it from there. We take each one and maybe a photo of something, and then we use it as reference next time we come across the same pattern, because wow, you'd be a very good trader by now if you knew every shape out as it formed along. So if you ask me, I feel like the previous day's movement ended up giving us this bullish pennant, bullish wedge or pennant, yes, which basically signifies a continuation up. But this, I might assume it as the false break. But depending on where it ends, if it goes below, we just know that no, our entry was, our analysis was wrong. We need to recheck. Some people like to call this the pennant. Some people like to use this shape and form the flag, the bull flag. See what I mean? We know that from here, we should expect the price to rally up the same amount of pips. It went from here to here, meaning around 600 pips. 600 pips. I'm gonna be looking at 600 pips from here to here. 600 pips from here to here. Okay, so my here. And this is the best thing about trading price action, because you'd be literally, if you understand the basics of this thing, you'd literally be checking that at some point you'd be realizing how much pips you can calculate on one move. So basically, okay, for instance, for example, I said I would be looking for at least, because I'm looking at only this move from here to here now, the past two previous day moves, and I'm looking at this before it formed this full bull flag, because the bull flag is basically a continuation pattern, but then the amount of pips that it moves, it's going to be the same as the initial move before it started to descend into its channel and then continuing. So basically this move from here to here, me calculating its pips and saying it's around, it's saying 61,880 points, it's close around 600 and I mean 60, look at me, you 618 pips. It's around that point, around, I'm thinking, depending on how much you calculate at the same time. Right, so I'm looking at this move from its breakout to cap at least 600, the same 600 points. So I know that I'd be looking at the next price structure around the 601 point, which might be around here, from the way it seems. So here could be the next place where I think price should go. You see? So it would be a continuation pattern, the bull flag pattern. Take it from here. Okay, it will be the bull flag pattern as soon as it breaks out. It should come back and maybe continue jiggle a little bit in this channel, but then afterwards, as soon as it breaks out around this area, we should be looking to take more buys. It's a confirmation that our move is valid around this area there. Okay. You could see a W around here. And this could mean two things, because this is the thing about a W. They say a W has to have the second wave should be longer than the first, right? And then in the W. Okay, I can't. So let me not act sure and wait for it. I'm going to put an alert as soon as price gets back here. An alert when price gets here. But for now, just one buy. And here we're going to hold it up until we get back into our channel, or if we close below this structure with at least, let me see where we are, from here to at least, okay, yeah, could at least put it back here to make it a 1 to 2 risk to reward, since around here. Okay, so it's 1, the risk to reward is 1, meaning for 1002, for 1002 pips, basically, yeah, I'm risking 1002 pips to make 2000 pips, you see. So it's 1:2, not necessarily exactly, but around the same. So that's how your risk and reward should work as in terms of money management, right? Around this area, might start looking at increasing my orders as I see price go towards my intended direction, right? We can easily see the very same place we're at right now as having, okay, let's just go to a low time frame. Okay, and this might be the bad part, because from on this lower time frame, on our 15-minute time frame, we kind of entered too early. We should have waited up at least until here. But then that's the thing. Okay, that's the thing. You learn. So if you're anywhere around this area, I'd basically say the 1660 range, the 1660, between the 1660 and the 1663, you can take any buy order. Right? Alright, then let's look at our entries, and then let's step away from the market, and then we'll come back.